It's time for our Monday special, Midcap Mania, with Nigel D'Souza. Nigel, what's on your radar today?
Well, the stock that's on my radar today is Nile, N-I-L-E. That's a small cap company. It's held 50% held by promoters. The remainder is held by only around 3,000 investors. Now, what caught my eye with regard to this space is that lead prices. They're up by nearly around 40% plus from the lows of this year. Last couple of months, in fact, they're up by around 17 to around 18%. Just last week now, we got news reports that suggested that Amara Raja had hiked the prices by around 5 to around 6%. And these are the two main factors why, in fact, this company did come on my radar. So it's referred to as the Amara Raja play. That's really the reason why I picked it up, because on the back of news about that price hike, firstly, Amara Raja, they produce close to around 20 million units per annum. Out of that, they require close to around 2 lakh units of lead alloys. And this company, that's Nile, contributes close to around 10% of the total lead alloy requirement. Moving on then, what is the background of this company? Basically, what they do is that they source lead scrap, then they convert it into lead, and then in fact they make it into lead alloys. The current capacity is at around 72,000 tons, and what I learned from the management is that they are now functioning at almost full capacity utilizations. If you just take a look at what they have done in the last few years, it was only around a 3,000 ton plant, then it moved to around a 72,000 ton plant just in the last 10 to around 12 years. So keep your eye on that one. But everyone wants to know financials. And the first half of the year has been particularly good. So on the top line, we've seen a growth of around 50%. We've seen the absolute EBITDA up by more than 120%. And the profitability as well has come in much higher by around 97% just on a year-on-year basis. So they've done very well in the first half of the year. One worry is that the finance cost, I don't know why it spiked up to such a large extent. It's up by more than around 50%. But if you just take a look at what they've done in the first half of this year and compare it to what they've done in the entire year, they've mostly done almost what they did in the entire of last year. So they've done around 16 crores at the halfway mark. Entire of last year, they did around 18.9 crores. In terms of profitability, they've done close to around 6 crore 70 lakhs. Last year, they did around 7 crores. So first half of the year clearly has been quite good. And in terms of revenues, it's grown from around a 280 crore company in the last few years to around a 425 crores. Remember, at the halfway mark, they've already given a revenue growth of around 50%. So let's see how the second half of the year does pan out. Remember, it's a dividend-paying company as well. But just keep your eye on it. We have been talking about Pondy oxides in the past, Gravita, and this one as well is from the same space. Very, very low volumes, small company, rather interesting. Back to you.